Hi, everybody. Jenica here with Keller Williams, and I have Jeff Moenning here with, is it CFG Financial?
CMG Financial.
CMG, sorry.
That's okay.
So we're going to just do a quick market update for you guys, and then Jeff's going to talk a little bit about a loan program that's really awesome for buyers. And if you want in the chat, feel free to add any comments that you might have or questions you want us to answer during our time here, and we'll try to get to those. I'm just going to open it up on my phone so I can look at those in case you guys have questions. Anyway, so good morning, happy Monday. So everybody's asking, or lots of people are asking what's going on with the market and, rates. And so we have seen a slowdown, and I don't think that's any news to anybody. So prices have come down, rates have obviously gone up, and the market is still moving. So we are still helping people buy and sell. We don't want you to be afraid of rates, but we do want you to, make sure when you get into a payment that it's affordable for you and your family. And, if you need to move, really focus on, your next move and what's important about that, and to decide if this is the right time for you to either buy or sell. Something else to keep in mind is just that you buy in the market you sell in. So if you have a home to buy and sell, it's all relative. If you're, getting a lower price for your home, unfortunately, as a seller, you're also paying a lower price when you go to buy. So really just keeping those things in mind. Jeff's going to talk a little bit about a 2-1 rate buy down. So that is a way to lower the rate temporarily when you get into a property right now. There are also options with getting closing cost credits from sellers. So sellers have definitely, swung the other direction where, 8 months ago, if you asked for a closing cost credit, you had no shot. And now sellers are becoming more reasonable because they have to. So that's an option. We have a client who just got an offer accepted $30,000 under the list price, and the property was only on the market for about a week. So, they didn't have to wait too long. Typically not until a few weeks on the market are sellers really willing to consider a price drop. So those are just some of the things that we're going to talk about today. I did want to start off by just showing you guys a picture of kind of how rates have been. So let's just see if this works. Hopefully you guys can see this, but this just shows mortgage rates annually from like 1972, which I wasn't born then, but 1972 all the way to 2021. And this orange line here shows that, on average, rates were 7.81%. And then that's from 72 to 21. And then like about 1989 to 21, rates were about 5.97. And I would say, Jeff, correct me if I'm wrong, but we're probably like in the, 6 to 6.5, somewhere around that, today. Is that correct?
Yeah, it's actually starting to come up a little bit more, but we're still definitely below where you see like that average rate of 7.81 when you look at as long as they've been collecting the data for it. But I would say we've seen some increases in the market the past few days. Today it's kind of getting hit a little bit. So right in that 6.5 range, probably even maybe a little bit higher.
Okay. Right
in there today.
Okay. So this just shows you, just trying to see when you look at it thinking, oh my gosh, the rates are so high. If you look at it over time, it's normalizing is kind of what we like to say. And what we're letting our clients know too, is that if you're, what you're saving or what you're paying for in the extra rate, you're saving a little bit in the cost of the home if sellers are coming down, 30, 50,000. And then the hope is that if rates do go down, that you can refinance later. None of us know when that will happen or if or how, but that's the idea, is that you're making up for some of that, where 6-8 months ago, you couldn't get into a home for under list price. You were having to pay over and compete and all that. So that's kind of gone away, I would say, mostly across the market and in all markets. What we're experiencing, there might be some where if there's really low inventory somewhere that there might be some multiple offer situations, but definitely not like what we were seeing before. So just wanted to go over that about rates. Also, sales volume is down now. we've noticed, just if you are a seller and have your home on the market or thinking about listing, when you go to do a price drop of $5,000 is not enough. So you really have to reduce it 10 to 15 to 20, 20,000, depending on, what your home is priced at. And, so you want to make sure to do that if you are, selling and considering a price reduction. And oftentimes it does come down to price. Unfortunately, there's even, areas that we are working in where we think, oh, here's the latest comp. And so we're going to price below it, because you really have to be priced below the recent sales. So your neighbor's house sold a month ago for 700. You have to price at like 675. I mean, you could still price at 700, but to get it moving, you really need to be priced below the comps. And sometimes even that's not enough right now, where we're saying, hey, we're priced so well, we should have an offer. And then we don't have an offer. So then it really comes down to just reducing the price. It's price, location, condition in real estate. So you can't change the location. And if the condition's the best it could be, or you can't do any more work, then it really comes down to price, because buyers are looking online. You can see how many times they viewed your home on different websites and things like that. So it comes down to price. 46.5% of pendings had a price reduction before their offer was accepted recently. So that just shows you, how many have had to do price reductions. And then obviously on the flip side, like about 53% didn't have to. So price it right from the beginning. We're here to help you. We want to be a resource for you. We're here to educate. My team we're not pushy salespeople, or we're going to, coerce you into buying, or, you need to do what's best for your family. If the payment makes sense and it's the time for you to move, then, and you can afford it, then, make the move. But we're just here to educate you. And we hope that, you'll call us or email us, and we appreciate all your guys' referrals, and thanks for watching. So we're going to let Jeff take over and kind of talk to us about the 2-1 buy down, and then just kind of his take on the market. And people might be asking, do you think because of the recession that rates will go down eventually, and kind of what your take is? But none of us have a crystal ball, so you guys can't hold us to it. So
yeah, I wish we did have that crystal ball. I would say, like we talked a little bit just a few minutes ago, the market, it's still pretty volatile. And just looking at it this morning, our 10-year treasury is up a little bit, so we are seeing an increase in the rates. But one thing I do talk about with all my potential buyers and everything, when we're getting them pre-approved, is to look at really where the rates are. And you hit a little bit on that, Jenica, as far as we're still below where you look at the national average. I mean, over the course of since 1971, we're still below that rate. I think we just all got really spoiled being down in those high 2s or 3s or what have you. So now we're starting to see it normalize and come up. And with that, obviously, you talked about pricing for homes are coming down a little bit. So I think that's going to balance out where that'll help the buyers in looking for homes. Those things I talk about too, that you'll probably see a little bit more willingness to give a credit or what have you to help towards that, bring those down. So as far as market goes, I think right now we're just kind of in this whole swing of where it's going up and down. I just don't see us back to those great 3s, but hopefully we'll see a little bit of a slowdown and see a market turn a little bit for us to maintain kind of where we're at, take advantage of different things. One of those things that you were talking about is the 2-1 buy down, and that's a great opportunity and a way for at least the foreseeable future to lower your interest rate down a couple of percentage points. So really, the way a 2-1 buy down works is for the first year you're 2% lower than the initial start rate. The second year it goes to 1% lower, and then third year on for your remaining term, it's at that initial start rate. So say today it was 6.75, you're looking at your first year at 4.75, 5.75 it adjusts to, and then the 6.75. So that's a great program to at least, who knows what the future is going to do. So if you could be in and start at that 4.75 and then see what happens where rates are in a year, maybe it is advantageous to at that point in time refinance and just put it back into the fixed rate term.
Yeah. How much does that normally cost a seller? Like if they, or does it just depend on different factors, like to do that 2-1 buy down?
Yeah, it's going
Gonna
to be
ask the seller to,
depend on different factors, the loan amount, and the percentage of that. And that's something that, if somebody's really interested in doing that, I have an actual worksheet that we could go and we can put in the numbers that they're really looking for that they are going to maybe offer on the home, and then we can figure out what the loan amount's going to be, and then we can put that in, and that's all rolled in. I mean, you have a couple options. You can either pay cash out of pocket for it, or you can just roll it into that loan amount. Be making sure it's all wrapped in. And
got it.
that's what I just say. Just because there's so many different factors, it'd be great just to contact me and we can go ahead and put that worksheet together and then be able to send it over to the buyer so that way they can be able to see and look and see if that's something that makes sense.
Okay. And then something else people will sometimes ask is like, oh, well, is it not, can't the seller just buy down the interest rate? Like, and if it's 6.75, like buy it down to like 5.75, but that costs a lot more, correct?
Absolutely. When
It's
you
not
start
a,
adding in the
yeah,
total cost over that, then yeah, because I've even thought of that too. I was like, why wouldn't we just try doing that? But when you look at it, it's a lot more money for the buyer to do it, and really the buyer and anyone else can. I mean, as far as the like a gift donor or whatever, could use that money to put you into that 2-1 buy down to help out.
right.
Um, so it's not something that you would have to necessarily just roll completely into the loan or pay out of pocket yourself.
Yeah. And then the seller could pay for either one of those options. But I think my point too is like the one where you try to buy it down for the life of the loan is not just like a couple thousand, dollars here
Right.
and there. It's like quite a bit more. Okay.
Exactly. Yeah. It adds up quite a bit for sure.
Okay.
Yeah. And another thing that we've been seeing that came out this summer is down payment assistance. That's something that I focus a lot on with my clients and clientele that I work with, a lot of first time home buyers. And they have a new program that CalHFA has that's called the Forgivable Equity Builder Loan. And what that is the down payment assistance program, which is through CalHFA, will give up to or 10% of your purchase price or appraised value to be able to use towards your down payment and your closing costs. And out of that 10%, it's basically whichever's less. So they're going to look at that, but it's off of that purchase price, not the loan amount. So, I mean, a real easy example is on a $400,000 purchase, you're looking at $40,000 that can be used towards your closing costs and down payment assistance. That gives you an increased amount of equity in the loan. And there are, a few things that do go along with this loan. It is requires you to be a first time home buyer, which is basically, and have owned the home for the last 3 years. And then to be completely forgiven, you need to be in the home at least 5 years. So you need to be the resident of that home for 5 years. And it's a great program. So as long as you don't refinance or sell your home in those 5 years, then that amount of money, that $40,000, completely forgiven off your loan. And if you do say rates did come down or whatever, and it just was advantageous to take advantage of a lower rate, then it's prorated down. So really every year that amount due is lower 20%. So depending where you refinance or sold, then it's going to be prorated off and only that amount is going to be paid back.
Mhm.
Now, one thing that is, it's not for everybody, unfortunately. That would be great. This is a loan that's really designed for the lower income tiers out there to help them be able to get into the home and be first time home buyers. So basically, they go off of Fannie Mae's area median income limit, and they take 80% of that AMI. And in basically our area, Sac County, Placer County, that's about 81,920 for that amount that the household has to be under that income to be able to qualify. So, like I said, it's not for everybody, but those that are in that area and looking and might need some additional help with your your funds for close, this is a great program that's out there and kind of getting started. But basically, you're looking in something like that when you put calculations in, you're coming in really with no money down. Another requirement that's needed is minimum credit score of at least 640, and those are all things that in the pre-approval process. So if you happen to be with Jenica and looking for this type of program, you can get you in touch with me, and then we can order up the credit and be able to see exactly where we're at and go through these guidelines. And it doesn't necessarily just lock you in on that program. If for whatever reason you have to make a little bit more, then there are a lot of other programs that be able to help out with up to about 5.5% to go toward payment closing costs.
Awesome. Thanks for sharing the details on that. It's
Yeah.
good to have all that. And then some people will ask, like, why is FHA, their rate is quite a bit like lower than conventional? Can you just speak to that a little bit?
I would say it's, FHA is built towards a little bit more challenged. I mean, I hate to say really towards the challenge credit or whatever, but it does allow you to go a little bit lower on your credit scores. And being government backed, obviously you're going to have less money down. So they require private mortgage insurance to be able to make sure that loan's insured. Obviously there's less skin in the game. So they want to make sure that that's covered in case of foreclosure or something like that. But they just tend to have that little bit lower rate. And you do have the mortgage insurance, so which is with your loan for the life of it. And so, it's good once you get to say 20% equity, and then you can be able to remove that, then switching over to conventional mortgage. And at that time, it kind of will balance out a little bit more just because you don't have the mortgage insurance on there versus whatever the rate was if it was a little bit higher. But a lot of people get really scared of FHA, and it's a great program. It's really helpful for somebody that doesn't have a lot of money to go put down. I will use that program along with the down payment assistance program a lot, and it really helps borrowers to be, again, if they say they only have a little bit of money saved up so far or access to, then what it does is take care of your down payment assistance, and then you can be able to cover, your payment, and then you'll be able to cover your closing costs.
Yeah, awesome. So Jeff's really good at that with the down payment assistance. So for anybody who is curious about that program and how to get involved with that, we'll put his information in the comments, but he's very great with that. There's some lenders who shy away from down payment assistance, and he's been like our go-to, and he's closed multiple loans for us and really helped our clients, and great with communication and customer service. So we're excited to be partnering with him. We're just going to check and see if you guys have any questions. Now would be the time to put them in the comments. And if not, we can always answer your questions at a later time. And we do have a brochure that Jeff sent us that kind of goes over the 2-1 buy down. I think you sent us that, right, Jeff?
Yes, I did.
So I'll post that also in the comments, just so you can kind of see what that breakdown is about. And doesn't look like we have any questions yet, but we just appreciate you guys watching, and we hope this was helpful. And again, Jenica with Keller Williams and Jeff with I'm going to mess
It's okay. CMG Financial.
CMG Financial. And we're just here for your questions and want to be a resource for you. So I'll link Jeff's information. I'll put the 2-1 buy down information in there. And then, call us anytime and we'd be happy to help you guys. Have a great day.